Okay, welcome to this part-time live trader session where we are going to be looking into the daily time frame to see what directional biases we have in the charts based on price action for during the day. Okay, let's see what price left for us, and those are possible directional biases in the markets. Okay, let's begin with the euro against the American dollar. This is the weekly time frame. As per our weekend market analysis, we did analyze this chart, and I showed you that there was a reversal formation, a strong bounce of that area that could bounce price to the upside, and actually we are seeing that bounce right here. This is one of those pairs we would have involved in, but we are involved in the sterling pounds against the American dollar. That's the one that we took to avoid the correlation trap. It's a nice push to the upside. I expect this push to continue for at least 2 weeks. All right, this week and next week. Okay, but tomorrow is FOMC. Tomorrow is FOMC. That could disrupt the price action or even push price further to the upside. So the FOMC announcement, meeting minute announcement, could have an influence in that. But for now, technically speaking, the euro against the American dollar is bouncing to the upside. It has some levels of resistance to deal with. Let's see the daily time frame. Okay, it has some levels of resistance to deal with. This is the first level of resistance, former support, which may now act as resistance. But you can see price has already cruised above that level. Price is sitting right up there. It will close for today above that level. But if by tomorrow we find price coming back down, if we find price by tomorrow coming back down, okay, then we are going to have a reversal formation, which is a bounce candle. A combination of the two last candles will give us a pin bar of that key level of resistance. Okay, so that is why it is not wise to conclude that price has are giving us a fake breakout of that entire area. That's this. We will not conclude now that this is a fake. That conclusion will be too hasty, so we are going to wait for one more day, which is tomorrow, to see what the next candle will look like. Whether we are going to see a bullish candle. If we get a bullish candle, a buy candle to the upside, then it's completely a fake breakout. All right, if we get price coming back down from current area, then we have a continuation formation, which is a reversal formation for price to keep pushing to the downside. In the other hand, if we have price give us this, not really a fake breakout, still closing above that level. I don't know if you are getting the picture. Still closing above that level right here, then it's also a continuation move. The next candle is likely going to be a bullish candle to the upside, a strong one indeed to the upside. So those are the three possible scenarios for tomorrow. So we'll wait and see what's going to happen. Again, remember, tomorrow is FOMC, so that will influence the market generally, and the American dollar, the euro against the American dollar, is one major candidate for that news announcement. All right, in the 4 hours time frame, okay, am I even supposed to look into this time frame? Okay, I should. And dollar, the next level to be hit is this area right there. If that area is broken, then we are going to see this next level. Okay, let's wait until the FOMC. The next pair is the New Zealand dollar against the Japanese yen. We talked about this again, where we're waiting to see the type of reaction we'll get off this counter trend line that was acting as support, and now holding price there as resistance. You can now see the price has broken above. Okay, just the same thing with the euro against the American dollar. We'll be watching to see what will happen here for tomorrow in order for us to decide where to trade. Actually, I am going to be taking a trade here by tomorrow based on the candlestick or the price action that I see around this area. Okay, so for now it has broken back up. The buyers are beginning to warm up for entries, to take entries or price to push to the upside, but we need to wait for tomorrow's candle. Okay, so don't click on your sell button. The next one is Australian dollar against the New Zealand dollar. We have also overanalyzed this pair in the daily time frame. It's a channel as impact. Price is now crawling to the downside. You need to remember that this overall pattern is a bearish one. Okay, it will eventually end bearish. It will end bearish, but we do not know when the breakout is going to happen. So if you are trading here, it is best to wait around the upper boundary. Okay, in the monthly time frame, we have a possible triangle formation where price is already trading around that area of resistance. It's an area of resistance, and price has been in this triangle for about 3 years. 3 years. All right, so each time it comes right here, it is resisted. Each time it comes to this level, it is supported. So right now it is trading around resistance area, so it is wise to go to look for short entries. In the daily time frame, we will wait for this channel to give way, one price to break below. If you were following in the intraday or in the intraday market analysis, I talked about this this channel here in the 4 hours time frame, that it's a hint that price will go down. You can confirm that right now, that price is already pushing to the downside. But these types of type of channels are usually very difficult to trade. But now that we are getting the breakout, we will begin to search for short opportunities in this pair. All right, next one, sterling pounds against the Swiss franc. No much noise here. I just want to let you know that it is time for a pullback. If you are looking to trade this pair, this is the best time to begin to search for long opportunities in this pair. Nothing much to talk about here. The Australian dollar against the American dollar, this is the daily time frame. We also found out that this range here was broken to the downside. That was the breakout, and the pullback, just like the euro against the American dollar, has come above that former level that was acting as support. It couldn't hold price as resistance, and so the whole of this price action might eventually become a fake breakout. FOMC tomorrow, we don't need to talk too much here. FOMC tomorrow, and this is a candidate for the FOMC news event, so we need to wait. For now, it is still too early to conclude if this is going to be a fake breakout or not, so let's wait for that. But as it is, technically speaking, if there was no news announcement coming, hey, this pair has made a fake breakout. It is likely to keep pushing to the upside. Okay, but I expect price to make some pullbacks, maybe to somewhere here before we can see a bounce to the upside. If I am to trade this pair, the American dollar against the Australian dollar against the American dollar, I will be waiting around the 0.728, 0.728 2 area, somewhere around in here, for price to make some little pushes. Then from there on, bang to the upside. That is where I would likely be waiting if there were no new news announcement coming ahead. Okay, next one, New Zealand dollar against the American dollar. This also is trading around critical zone, multiple resistance level at that point, but the momentum push to the upside is too strong, and there is no sign of resistance. Okay, there is no sign of rejection at that particular level. So the momentum in the New Zealand dollar against the American dollar is really strong enough. That shows that the New Zealand dollar is getting really stronger, if you see this type of momentum, be very hesitant going short. Price has shown enough strength for a possible breakout to the upside. Again, let's wait for the FOMC tomorrow. Okay. All right. Next one, the American dollar against the Japanese yen. Well, this pair is moving downwards in some form of a channel formation in the daily time frame, crawling slowly. This is the point that you need to wait around here if you are to go short, and of course it is a bearish pair right now. If price makes any push to that area, you should be looking for short opportunities back down. I am personally waiting around that line. I am waiting around here. If I see price come close to that area, I'll be looking for short opportunities from there on. It's a bearish pair, still very bearish, but Japanese yen went really weak today. The American dollar, both the American dollar and the Japanese yen went very weak today, so nothing much expected, but the American dollar was quite stronger than the Japanese yen. Sorry about that. Okay, that means the Japanese yen was weaker than the American dollar. All right, so it's a ranging day. Okay, Australian dollar against the Canadian dollar. This was another one that we were following, looking for possible bounces of that area, but no bounce yet. It is just still there. This is resistance zone, so we are still watching. For now, there is nothing, and do not go long. Don't go long. It is still sitting around heavy resistance level. We are watching for possible entries. Now, the euro against the sterling pounds, this pair is bearish for tomorrow. If you are looking to trade this pair, you want to search for short opportunities. It is bearish, but remember, both the euro and the sterling pounds are both strong pairs at the moment. They are both strong pairs, currencies at the moment. They are both strong currencies at the moment. So the movement of this pair, even though directional bias is to the downside, might not be that smooth. All right, might not be that smooth, especially for those keeping tight stop losses. It might wiggle hitting stop losses, but on the whole, pushing to the downside. If you are to trade this pair for tomorrow, just still bearish with this one. Finally, the sterling pounds against the American dollar. We took a buy entry earlier this week around that key level that was acting both as resistance and support there. That's our entry based on that weekly doji that we spotted out earlier in the weekend market analysis. You can see the doji there, and that has performed quite well. Okay, and we are sitting at a break-even position. We have cashed out 50% of our profit, and we are letting the remaining 50% run. In fact, for the entire week, you want to stay bullish. Don't click on your sell button in the sterling pounds against the American dollar. Tomorrow is FOMC. This is another candidate for that news announcement. So let's see how it goes. Hopefully, before the end of tomorrow, we'll be finding valid trading opportunities in the very long term. Majority, I repeat, are plenty of the trading opportunities are now in the very short term. They are mostly found in the intraday time frames, the 30 minutes, 1 hour. That is where you find plenty of the trading opportunities, but I'm not going to be discussing that now. We'll be doing that in the intraday live trading session tomorrow morning before the London market opens. For now, based on the part-time traders live market analysis, these are the directional bias for those pairs that we have just discussed. All right, thanks for watching. If you have questions as usual or contributions, please send them across to any of our channels, and we'll be very happy to respond to them. Bye bye.